All right. I think we're live.
Hi, Trevor. We are back to Beat the Odds Business and Wealth podcast. It's the first 2025 edition.
It is, and we're pretty excited about that.
Yeah, yeah. So
Just
today we're going
gotta.
to talk about some 2025 tax-free savings account, high risk, high reward strategies.
That sounds good to me. I just gotta mute the speaker there. There, we're good. Okay, so high risk, high reward, TFSA strategies. So what do you got for me today?
Well, I mean, every year you get some new room in your tax-free savings account, another $7,000 of contribution room. Most people have never used their entire contribution room, but I mean, the first thing they need to really understand is, the significance of your tax-free savings account. For most people, it's probably going to be the default on what you can and should contribute to. Um, we'll say said it before, said it again. Your RSP is a scam because it's usually sold for the wrong purpose. It's a tax deferral strategy, not a fast way to grow money as it's sold to people as. But your tax-free savings account, with enough of a timeline and rate of return, it's going to, in fact, grow your money faster than a registered retirement savings plan, so an RRSP. So, um, but most people, I think where they go wrong with tax-free savings accounts is like the default we see in a lot of them. They're these high interest savings accounts. So I mean they're getting 2, 3, 4% in these high interest savings accounts, and it's effectively you're losing money after the real rate of inflation. And so if you're trying to save for a house and the value of houses in Canada to go up by 6% every year, and you're getting 2, 3, 4% in your tax free savings accounts, it's like you're actually moving backwards, right? If you're looking
Yeah.
at ounces of gold and they're going up by 9% a year over the last 25 years, and again, if you're in a tax-free savings account at 2, 3, 4%, even though you're not paying any tax, you're actually going backwards in terms of real rates of return after considering inflation. So, you know, at a minimum, people should be considering some high quality stocks. Okay, at a minimum, some high quality stocks, and I say the forgotten part is people should be considering an allocation to gold. And to get that in your tax-free savings account, you can use a gold ETF. That is one way to consider it. And I actually think a 0% allocation in anyone's portfolio to gold is in itself kind of risky.
Well,
Gold has
I,
been
I
the
think the majority of people who have heard about the TFSA, a tax-free savings account, think of it just as that. It's just a place where I can put money in there and I've got some tax-free savings. So they just use it as a savings account. They don't know that they can actually take those funds and turn it into an investment vehicle. I think maybe we need to back up a step and because you're telling people, okay, you can buy an ETF, you can buy a gold stock, you can buy this or that. But I think a lot of people out there in Canada don't really know that the TFSA and maybe in the bank that they're using, maybe in the bank that they're using, the TFSA isn't set up properly to be used as an investment vehicle. But maybe back up a step and let people know like how they can actually do this.
Yeah, I would say that is a default. Most people walk into their friendly Big Five bank and they put them into some sort of high interest savings account within their tax-free savings account, or they put them, and that's a kind of the worst case scenario, or they put them into some sort of high fee mutual fund, which is 60% allocated to stocks and 40% allocated to bonds, which are again have been underperforming the real rates of inflation for the last 2, 3 decades now at this point. So most people probably don't know that they can get control of their tax-free savings account and put it into what they research and what they deem to be a good rate of return. The effective platform like a Wealthsimple. These days when I started investing, a long time ago at this point, 26 years ago, a Wealthsimple account was not something that you had even, right? So, but now something like that where you're getting charged, a very small percentage point. In fact, it's advertised as free, but if you look at they're making money on the spreads, which they sell the investment product, which is fine. It's a great deal for, someone's contributing $100 or $200 a month. They can get control of their tax-free savings account. So super useful, super useful, right? And I would suggest any form of long-term savings in a vehicle that's going to underperform the real rates of inflation is actually very risky. And that's the point where most people don't understand. There's a difference between volatility and risk. Just because something is low in volatility, but it has 10, 20, 30 years of history suggesting that it underperforms the real rates of inflation, that in itself is actually very, very risky. Your risk is certain that you're going to underperform inflation. So, people should look at getting control over their own investment accounts. And it's funny, Scotiabank has their own advertising campaign these days about getting control of your getting control of your investment accounts. And it's a picture of a dad who's like a little league baseball coach. It's like, if you can manage a team, you can manage your own investments. And that's, according to Scotiabank, right? But then, of course, when you go into the branch, it's like, that's not what they pitch, right? But that's the pitch. That's what I'm going to get retargeted on based on my search history, right? To self-directed investments. So, very interesting that Scotiabank would say it. I was like, for all I rag on the big banks, it's like, that might be the actual true statement that they said. If you can manage that team, you could probably manage your own investment accounts, right? And so,
Yeah. Well, the devil
most
will be
people,
in the details on that to see how much their fees are per trade.
yeah, yeah. I mean, and once you get beyond that, you don't have to go to the bank. You don't just have to use an interest-bearing account. You don't just have to use the high fee mutual funds that the banks are selling to. You start to understand it's like, okay, I can just buy a broad-based ETF that's holding the S&P 500 or the TSX 60 or high yielding Canadian dividend paying stocks, which we really like, right? And once you get into those areas, you start to understand it's like, hey, these have always outperformed kind of the 60-40 split. But then you start to get into the more risky strategy, because people don't understand. It's like your tax-free savings account. It's like, if you do something and it does it doubles, it triples, it quadruples in value, that is all tax-free money, right? And so the tendency the thought process is, if you have something that is a very high risk, high return type of investment, maybe you should have it in your tax-free savings account, because if it does pay off, you will keep all of that, right? The converse of that is your tax-free savings account is, that room is so valuable that maybe you don't want to burn it all on one thing, right? And the example that we brought up in the last couple of weeks is the weed stocks. How many clients have figured out that the high risk, high rate of return type of value should be in your tax-free savings account, and then we see people in their tax-free savings account and they have weed stocks and they've plummeted in value, right? And so I wouldn't underestimate the importance. I'm not sure like either of those approaches for most people. For the average person, I'm not sure putting using all of your TFSA room in something that's high risk, high reward. That's kind of that kind of is a risky strategy. But at the same point too, if you are going to be holding something that has a high risk, high reward rate of return, maybe holding a portion of that in your tax-free savings account is the play. So, I mean, mine, full disclosure is mine is I've joked for last couple of years with people is my 60-40 split to my tax-free savings account, which is 60% for growth in a Bitcoin ETF and 40% for wealth preservation, also in a Bitcoin ETF. And I've had the entire lifetime limit in a Bitcoin ETF for the last couple of years, right? And now I'm past the three bagger at this point in time, right? With that sort of strategy. Now that's not something that I think everyone should do, because that tax-free savings account for me is not my only portfolio. And that sort of investment, I can withstand that going to zero, right? But I did something interesting, Trevor. I did something different that would
What did you
be
do?
different this year. It's I tell people it's like you probably shouldn't hold investments if you're trying to just discern what is a good investment. I tell people, ask yourself, is this the investment that you would want to hold in your family for the next 100 years? And if you can answer yes, maybe it actually is a good investment. If you have a thesis and a reasoning why it's you'd be able to hold this in your family for the next 100 years. But if you think this is the latest flavor of the day, the latest weed stock, or the hot stock tip that's going to be on top for the next 2 years, it's like that's how you take big risks in investment, and that's how you make big mistakes, right? So I generally tell people it's like you want to hold investments that you think you can hold in your family for the next 100 years, even though you're not going to live 100 years, and even though some of us, some people don't have kids, it's like it really helps you make better investment decisions, right? And right now we're talking about TFSAs. When you look at non-taxable accounts, it's like there's a tax effect too. So really important, to kind of think about that risk return. But I did something a little bit different this time, Trevor. Is I got my new $7,000 worth of room on January 1st.
Okay.
And I bought something that I'm not sure is going to be a good investment for the next 100 years. But I'm also here in Dubai, and I think I paid $1,600 to watch for a good seat to look at the fireworks for Dubai New Year's. It's kind of a really locked down place. And people think that there's 1.6 million people that go downtown Dubai to watch the fireworks. So basically, there's a whole bunch of security, and you won't get past. It's not like we're accustomed to in Canada, where you just come an hour or two before the fireworks, and you can stand outside whatever local municipality you are and watch the firework display. It's like you got to have a seat and a ticket booked, or else they're not going to let you there, because if they just let 1.6 million people descend on the best viewing angles, it would be complete and utter chaos. Right? So they really start to restrict it, right? But I thought about just doubling down and buying some more Bitcoin, but I actually went and with my next $7,000, I bought some MicroStrategy shares. So
Okay. I figured
so
you would.
yeah. So I thought that was and I don't think that's an investment that's going to be I don't have the thesis of why that's a good investment for the next 100 years. But it's a kind of a structural attack on the financial system. And I just wanted a ticket to the show. It was like watching watching the fireworks. It's more I'm a bit of a fan, and I just want to see how this plays out. And I want to say that I had a ticket to the show, right?
Yeah, for
Because
sure.
although I don't think it's a strategy for the next 100 years. Michael Saylor or MicroStrategy, he's basically turned his software development company into a Bitcoin treasury company, and I don't see I don't see how that stops, say, in the next 2, 3, 4, 5 years, right, of what he has going on, right? Maybe it will, maybe it won't, but I don't see the wheels coming off in the next 2, 3, 4, 5 years. I think at some point he needs to pivot that business and do something different. But it's really interesting, and most people aren't paying attention to what's going on there, right?
Yeah, well, with MicroStrategies, like you said, a lot of countries that don't have an ETF, Bitcoin ETF, that's a way for them to kind of get into the Bitcoin market using the bonds that were released on through MicroStrategies.
Yeah, so that's kind of the thing. It's like, we in Canada, we can go and buy a Bitcoin ETF, an RRSP or TFSA, but if you're in the same similar retirement account in the UK, for example, you can't just go buy a Bitcoin ETF. So what do you do if you want exposure to it? You buy a proxy like MicroStrategy. And so, he's found that stranded capital, if you were, or people who were in charge of, at sometimes big pools of capital, and they're not allowed to buy a Bitcoin ETF, but they want exposure to Bitcoin. They're buying shares of MicroStrategy. And then the even bigger pool of capital is the people who they're not allowed to buy Bitcoin ETFs. They're not even allowed to buy stocks, but what they can do is buy bonds. And what do they want for exposure to bonds? It's like they actually want some exposure to Bitcoin. So if they allocate 1 or 2%, if you're a pension fund or a sovereign wealth fund, and you start out allocating 1 or 2%, it's like there are hundreds of trillions of dollars in capital that are people, they want exposure to Bitcoin, but they can't get it, and so they're using a proxy like MicroStrategy. So
Mhm.
it's going to be very interesting on how that turns out. It's I would liken it to how George Soros kind of bet against the UK pound back in the early '90s, and oh, I think what was the name of the two brothers who they bet against the silver market too at that point. It's kind of one of these speculative attacks, and I think this thing's got more legs because he's not unlike the brothers who bet against silver. He's not using his own capital. He's using other people's capital who they want exposure to Bitcoin, but because of regulatory reasons or compliance reasons, they can't do it. So they're buying shares of MicroStrategy, and so and then I think we're also all underestimating the dumb money loop. Okay,
Yeah.
the dumb money loop is a lot of people they just blindly buy the S&P 500 because 10 or 20 years ago, Warren Buffett famously said everyone it's going to be really hard to outperform the S&P 500, and people have been doing that religiously. But at this point now, you have the S&P 500 that's trading at like 30 times earnings, and I think 35% of the index is of that 500 companies is tied up in the seven largest stocks, with incredibly, historically high price to earnings ratio. And it's like, to me, that actually becomes a bit of a risk, right? And so when people are thinking that if they only have the S&P 500, that they're somehow de-risked, it's like, well, in as well, and it's in a way that is kind of risky, right? But and their MicroStrategy is kind of on the outside looking into that dumb money loop. They got listed to the Nasdaq 100 recently, but not in the S&P 500. But what's potentially going to happen in 2025 is they're changing the accounting rules, so they're going to be able to value the Bitcoin on MicroStrategy's balance sheet at the market rate. So it's really just sitting there at the historic cost on the balance sheet. You can only book, the old rules are you got to book it at the lower of cost or market value, the lower of. So if there's an impairment, you could book it, but if there was an increase in value, you couldn't book it, right? And so in order to be listed on the S&P 500, you got to be one of the 500 biggest companies on the U.S. public on the U.S. stock market, which they already are. But the problem is you also have to be profitable in the last quarter and the last 4 quarters combined. And the software business really just isn't that profitable. All of the
Right.
gains are from the appreciation in the value of the Bitcoin, which,
Mhm.
prior to 2025 couldn't be booked. And so my understanding of what's going to happen is all the appreciation up until December 31st, it's going to be booked through retained earnings, so it won't show up on the income statement. But after December 31st, it's going to flow through on the income statement. So you're looking at the closing price on December 31st, which was, I don't know, 95,000 US or something like that. And then you're going to look forward to what is that closing price on March 31st. If Trump comes in and passes a whole bunch of pro Bitcoin policies, or who knows, even starts a Bitcoin strategic reserve, and the price of Bitcoin goes up, well, then what happens is when MicroStrategy releases their first quarter earnings report, they're going to be able to book the gain from December 31st until March 31st, and that's going to flow through the income statement. And that gain on that Bitcoin it's going to dwarf the size of the software business completely. So if there's any sizable
Mhm.
gain on the Bitcoin holdings, it's going to erase all of the losses from the software business. And all of a sudden, well, theoretically, MicroStrategy would meet the criteria to be included in the S&P 500. And if they're included in the S&P 500, as there will be the kind of blind dumb money that falls into the S&P 500 index, and as he gets that dumb money, he will buy more Bitcoin, and the price of Bitcoin will go up, and he'll issue more bonds, and and then he'll buy more Bitcoin with that, and there'll be more money flow in from the S&P 500 to kind of doom loop. And so it's going to be a very interesting. It's kind of a structural attack on a system, and I don't see I'm like I don't I have no reason of why it would go on for 100 years, but I have no reason of why it would stop in the next 1 to 5 years, right? And so it's
Mhm.
going to be
Yeah, it's
very
going to be very
interesting.
interesting to see what happens with MicroStrategies. Just getting access to the S&P 500 and all that dumb money that's going into it. So, I mean, all the RSPs, all of the different, mutual funds and so forth, and seg funds that have S&P in it, all that money is just going to be flowing into MicroStrategies at some percentage point.
Yeah, it's just like most people are not going to own Bitcoin until they wake up one day and they realize that RBC bought it for them, right? They realize that Scotiabank bought it for them. They're going to see that 1% of their portfolio is in there if they read the fine print. And so that's going to be very interesting. And like I said, it's I'm deviating from my core advice, which is don't buy assets that you don't think you can hold for 100 years. You don't have a reason. Like maybe MicroStrategy pivots to become the world's biggest Bitcoin bank, but that's all very hypothetical, right? And you don't buy a stock based on a hypothetical business plan that may or may not be initiated someday.
Mhm.
But at this point, I'm just a fan, and it's probably no different than buying a seat to watch the fireworks here in Dubai, or watching a Stanley Cup playoff game where you overpay for those seats, right? It'll be really interesting to see, and I think there's a high probability that you see them listed in the S&P 500 in 2025, and that'll be interesting, very interesting to see how that's going to play out with that dumb money loop that will start flowing um, into that investment vehicle. So
All right. Well, that sounds like a lot of fun. I think it's going to be an exciting year, regardless of what happens with that. What are you doing right now? I know it's what is that, about 10 o'clock? No, you're about 9, 10 o'clock there.
yeah, yeah. Well, I'm getting through the immigration process here in Dubai in the United Arab Emirates, and the first step is you have to come in, and they tell you you're supposed to stamp your passport, but they don't actually do anything anymore. So they're not stamping it at the when you fly in, which is a little bit confusing because you hear that you're supposed to do it, but I think they found out that that was congesting the check-in process too much, right? And so then the next step is you actually had to go and get the medical appointment, and so you have to go down to the government office and get the medical appointment, and they draw some blood, and they put you through the old X-ray machine and take some pictures, and massive lineup for people that are doing there. But of course, it's Dubai, so if you tell them you're willing to pay more, you get to the front of the line. And so that was interesting, and then I had to go get to the fingerprinting process. And so they got through the fingerprinting process, and at first I booked the fingerprinting process, and they didn't have an appointment available until January 29th. And of course, my
Oh
plan is
no.
to fly out on January 25th. So that's way too late. But then I indicated that I am willing to pay more. Can you get me to the front of the line? And of course, there's always some there's always some ways to the front of the line here. It's kind of the opposite of Canada, where it doesn't matter if you have more money, they're gonna kind of you're you're gonna just still sit and wait in the waiting room, or waiting for
That's
you know
right.
the the crevices of the government. So there's kind of always a way to the front there. So I did that, and looking forward to my ID card showing up next week, and get some accounts rolling from there. So it's interesting process, but I think it's flowing rather well. And what I'm hopeful is people can use this information for today. And I wouldn't say the goal is here to how do we help the ordinary Canadian beat the odds at business and wealth. It's like it's not that you want to use all of your TFSA for high risk strategies. That's not the goal. But so you use a portion of it, probably. Probably, probably the most risky thing you could do in your TFSA is invest the entirety of it into something that will underperform real inflation, aka a high interest, which is really a low interest savings account or a bond, right? If you leave money in there year after year, decade after decade, it's like your risk of not keeping up with inflation is certain, right? And so you should look at core stock holdings, stuff that is going to outperform um, the real rate of inflation. You should look at, consider taking an allocation in a gold ETF, which has been effective store of value for 5,000 years. And I think the wrong answer in Bitcoin is 0%. I think if 0% of your TFSA is allocated to Bitcoin, I think owning strategies and MicroStrategy are way out there on the risk curve, and I think it's kind of fun. But I don't have the investment thesis of why I should have it. I liken it to buying tickets to a Stanley Cup playoff game or something like that, right?
Just see what's happened.
Just to see what happened, because I'm a fan. I feel like I have to say I bought some, right? But for most people, a 0% allocation in that investment vehicle to a Bitcoin ETF, I think is the wrong choice, right? I can even wrap my head around someone who has 1%. They just can't walk out there and they just don't understand. It's like you got 1%, and you got to get off of zero. You have to get off of zero. If it's 1%, I think that's the high risk, high reward strategy for your TFSA for 2025. Do your own research on that, but it's I think very, very difficult to make the argument that 0% of your TFSA is invested in Bitcoin for 2025.
All right, Josh, sounds good. Next week, you're still going to be in Dubai, so we'll see everybody here at the same place, maybe not the same time, but looking forward to seeing what we have to discuss next week.
Right on. We'll talk to you then, Trevor.
You bet. Bye.